What's going on, people? If you don't know who I am, my name is Clarissa, and I'm here to give you the real talk about what banks actually require for you to get your clients funded. Not the BS everybody tells you that the banks themselves tell you in their websites. So, in today's video, we're breaking down the hidden banking requirements that 99% of funding companies have no clue about. And honestly, this is why most of you are stuck in getting your clients denied or approved for tiny amounts when they could be getting six figures. I've helped my clients access over $50 million in funding, and I'm about to show you exactly what banks are really looking for behind the closed doors. This isn't theory, this is what actually is working right now in 2025. Before we jump in, let me be clear about what I help funding companies scale past $50,000 per month by teaching them the system that actually work, not the outdated stuff that everyone else is teaching, but the real strategies that get you results. So if you are tired of getting your clients denied or approved for pocket change, pay attention because this is going to be the change of everything inside of your business. All right. Let's start with the truth that nobody wants to tell you. Banks don't actually care about the credit score as much as they pretend they do. What they are really looking for is what I call the banking relationship matrix. Most funding companies are out there focusing on just the credit repair, thinking that that's going to solve everything. And look, of course, the credit score matters, but they're not the only deciding factor. What really gets your clients approved for big numbers is having the right banking foundations. You can send someone with an 800 credit score to apply for funding, and if they don't have the proper banking relationship, they're getting denied or approved for scraps. Meanwhile, someone with a 720 score who has the right banking setup is walking away with $150,000. The banks are looking at relationship depth, not just the credit scores, and most funding companies have no idea that this even exists. Now, here is what you need to understand. Every single bank has an internal rating system for every customer. This isn't just their credit score. This is how they rate their rate you as a customer based on your relationship with them. Your client needs to build what I call true banking relationship. This means business checking, business savings, consistent deposits, and activity that shows their real business. Here's what you need to understand. Every single bank has an internal rating system for every single one of their customers. This isn't just their credit score. This is how they rate you as a customer based on your relationship with them. So your clients need to build what I call a true banking relationship. This means business checking, consistent deposits, and activity that shows that they're in a real business, not just someone who is trying to get quick money. But here's the reality in 2025. But if you stick around until the end of the video, I will share with you what you can have your clients apply for while they wait for that period so they don't get too anxious. Now, before 2024, you could get away with applying right after opening a bank account, but those days are honestly over. Banks are way more strict now because too many people were defaulting on their credit cards and business loan. So now this banking relationship period is mandatory if you want maximum approvals and limits. But I understand some clients are in a rush and don't want to wait. So here's what I tell my clients, that they have two options. Number one, we do it the rushed way, but whatever you get approved for is on you. Don't come crying when you get 10K instead of 100K. And option number two would be to follow my plan, wait the proper time, and get the maximum amount. Now, if you're charging a percentage of the funding, which you probably are, you need to be careful with option number one, because if they are getting approved for less money, then you get paid less money. So I always tell my clients that by picking option number one, they're also potentially damaging how much I get paid, since this is a performance based. So you need to be thinking about that. Most of the times, what we try to make the client understand, and they understand once they see what's at stake. And that's also a reason why we have all of our clients charge upfront, so that this doesn't become an issue. Now, not all banks are created equal. Obviously, some banks are easier to get approved with and give higher limits, and some pull from different credit bureaus. So inside of my community, we have detailed data points on what banks are available in each state, which bureau they pull from. But obviously, I can't give you all that information for free in just this YouTube video. That's what my paying clients get access to. But what I can tell you is that you need to be strategic about which banks you send your client to and in what order. Random applications are the recipe for a disaster. So if you want access to our complete banking database and the exact sequence we use, you'll need to book a call with my team. The link is in the description. Now, let me explain something that I get asked about constantly. What's exactly a one round of funding? So to put it simply, one round consists on applying for 2 to 3 banks per credit bureau. So if your client has good credit across all 3 bureaus, that's potentially 6 to 9 applications in one round. You can do additional rounds every 6 to 12 months, depending on how their profile looks like and what businesses what's their business needs, basically. The key is spacing this out properly and being strategic about which bank you hit in which round. You don't want to waste applications on banks that aren't going to give you the limits that you need. Now, here's something that we need to address. Does your client have cash to open this fund to fund these open accounts and build a relationship with these banks? If they do, that's great because that makes everything a lot easier. They can just open the account, make the deposit, and build those proper relationships. But if they don't have cash, don't worry, we have a solution. Option number one would be to get them approved for one credit card first with the bank that they have the most relationship already with on the personal side, liquidate about 50% of that limit, and use those funds to season and opening the new bank accounts. Option number two would be to give them a live stream loan, a personal loan that they can get up to $50,000 with no documentation, and use those funds to build the banking relationship. Either way, we can work with whatever solution with whatever situation your client is in. The key is being creative and having multiple strategies in your back pocket. Look, I'm going to be very real with you. Most funding companies are doing this completely wrong. They're sending clients to apply randomly, hoping something that will stick, and they're wondering why their approval rates are trash. The companies that are really winning, they are the ones doing $70,000, $100,000 per month. They understand that this is a systematic process. It's not about luck or hoping for the best. It's about following a proven system that actually works. And that system starts with proper banking relationship, strategic application sequences, and understanding what each bank actually wants to see. Now, since you made it this far into the video, I want to share with you 3 cards that your clients can apply for that won't hurt their main funding sequence. Now, full disclaimer, to qualify, they will need to be in business for at least 6 months, have consistent cash flow, and show a bare minimum of $20,000 in monthly revenue. And keep in mind, these are not going to be 0%, but they also don't require a hard inquiry. So for me, it's a win-win. Option number 1 would be Bill, which is formerly known as Divvy. The pros of this card are that it reports to business credit bureaus, so you're also building business credit. Offer expense tracking tools, virtual credit cards that they can give to their employees, and it doesn't require a personal guarantee. This is great for building business credits while also managing the spending. And they're pretty lenient with the approvals that they do. The approvals, though, on their con side is based on the business revenue and the cash flow, not their credit score. So newer or lower business credits are not going to be approved or for very low limits. Option number 2 would be Capital on Tap. The pros are that it's very easy online applications. It reports to Experian Business, has high approval rates for established business owners, and it also offers cashback rewards. Some cons would be that it requires a personal guarantee, but it's only a soft credit check. So it's not fully PG free, but it also doesn't do a hard inquiry, and is limited to certain types of businesses and certain states. Option number 3 would be Revenue. This one is going to be working very well for those people with the bad credit, since it's based purely on the business revenue, not their credit score. It offers flexible funding through a Visa business card tied to a revenue-based line of credit. So it's a line of credit, not a credit card. And the cons is that it doesn't report to any credit bureau, so it's not unfortunately building any business credit, and the fees can be a little higher than traditional cards, but it's still a good way to have short-term cash flow instead of like actual credit builder. So there you have it. The real banking requirements that most funding companies never actually learn. This isn't surface level stuff everyone else is teaching. This is the behind the scenes intel that separates the winners from everybody else. If you want to implement this strategy into your funding company and start seeing the kind of approval rates and limits that will actually move the needle in your business, you need to book a call with my team. We'll show you exactly how to combine these business banking strategies with our complete client acquisition system and our proven sales process, and get everything else that you need in order to scale past $50,000 a month. The link is in the description. Don't let another month go by watching your competitors get better results while you're still stuck using outdated methods. Book a call, get the real strategy, and let's get your funding company where it needs to be. See you in the next video.